The market looks encouraging right now. Bitcoin's holding 65,000. The headlines say recovery. Capital flows say the opposite. 4 false breakouts in 2 weeks. The last one was yesterday. The crowd's getting caught on the expectation of a rally, and it's not hard to read if you know where to look. Quick word on timing for new viewers. In the system I trade, the week closes Wednesday. And next Wednesday is a scheduled Fed Wednesday, July 29th, 2 p.m. New York time. On top of that, we're inside the blackout window right now. Since last Saturday, Fed members can't publicly comment on rates. There's no information out there, and it all hits the market in one packet on Wednesday. That's where the rhythm comes from. Wednesday's the climax, Thursday's the reaction, Friday's when you take stock. That's BIOS time, and that's what we work by. On to the market. The overall frame, they're holding us in a range and not letting us up. The weekly chart isn't breaking higher. We're staying at current readings, and there's a small local curl. We could spend some time in this range. Meanwhile, trend dominance isn't falling below minus 10%. They still haven't laid it on the floor. The 5-day chart, same thing. We're drifting toward the moving average slowly. No activity, trend dominance sitting steady at 13. The problem would be a break of ADP support at minus 52%. That's the signal we'd be parked in this drop a lot longer. The 3-day chart is a flat band since July 9th, no up, no down, and trend dominance running almost a straight line. The daily chart, since May, we've been completely below the zero line. They're not letting us anywhere. Trend dominance holds above 10, but doesn't get past 36 and stays below the zero line. The bad signal here would be a break of current ADP support at minus 14%. Now, the 12-hour chart. This is where the whole week lives. 4 false breakouts, July 11th, the 16th, the 22nd, one of the cleanest, and the last one yesterday, the 23rd. Look at yesterday's closely. Trend dominance crossed above 50% by literally a tenth. Symbolic, and ADP didn't even go for the attack on zero, it just closed below it. Reach blinks green, price doesn't move. That's what catching people on expectation looks like. Up top, they show you hope, and capital doesn't confirm a single one of those breakouts. The 4-hour chart confirms it. Since July 22nd, weak false closes, and this morning a clean close below zero. Both trend dominance and ADP went under the zero line. Most likely the run goes down to minus 3%. We're watching the position. The 2-hour chart, same thing. Closed without breaking above the zero line, we stay below zero. Now, Bitcoin separately. The weekly chart is curling too. We didn't reach zero. Most likely we stay in the current range, and the main thing here is not to drop below support at minus 19%. The 5-day chart, same picture. Didn't reach zero curling, and we could run down to minus 19 and still stay inside our readings. So the 3-day chart, 3 attempts at zero, all failed, a full close below zero and the same curl. But the daily chart is still holding above zero. Since July 5th, there were 2 dips below zero, the 9th and the 15th, both bought back fast. Judging by the higher time frames, that could turn out temporary. The clear marker here, if Bitcoin drops below current support at minus 1.5%, the run to minus 8 opens up. The 12-hour chart looks like the daily, nothing unusual. Holding above zero with dips on July 14th and 17th. We're watching whether it goes below zero or breaks minus 1.3. Then the path opens down to minus 5. Bitcoin's 4-hour chart already looks like the broader market. Dropped below zero, then a retest attempt, and back below zero. If we don't break minus 2%, we stay in the current range. If it breaks, we go deeper. The 2-hour chart is basically the same picture. Went below zero, the retest went nowhere, still in the range. That's where the setup comes from. On Bitcoin, the 12-hour chart is green while the 4-hour chart is red. That's uncertainty, no sync. On the broader market, both the 12-hour and 4-hour charts are red. The picture converges. So we trade the broader market with group orders. Here's how we act. We watch the higher ones, the 12-hour and daily charts, how they behave. But we react to the 4-hour, 2-hour, and of course the 1-hour charts. If the 4-hour chart stays where it is and heads down, and the 2-hour chart confirms it, then on the 1-hour chart we wait for the approach to the zero line and build shorts from there. And separately, when Bitcoin has no clarity and the market's in a downtrend, don't go long. Even as a scalp, it's dangerous. Those are just attempts to catch a bounce. And catching bounces always costs more than trading with the trend. What to watch from here? The key is the market's 12-hour and daily charts. Whether the 12-hour chart can finally break zero instead of faking another breakout. A real break in the picture would be an actual lock above the zero line with trend dominance confirming. Not by a tenth, with real reach behind it. A fifth false breakout in a row confirms the opposite. They're holding us below zero on purpose. The signal things are getting worse would be supports breaking. Minus 14 on the market's daily chart, minus 1.5 on Bitcoin's daily chart. And keep in mind, Wednesday brings the Fed decision. The blackout ends. All the stored up information hits the market at once. Wednesdays like that often settle things, so we react to fact, not to expectation, which is exactly what this whole review has been about. That's it for the week. Every indicator I showed today is on the platform, link in the description. There's a free tier, so you can see how it works without putting anything in. See you next Friday.